Hi, this is Randy Finney with the Right Side of the Chart. This is a mid-session update for Wednesday, November 20th, 2019. I'll start out with a brief overview of the broad markets and then roll into some of the recent trade ideas that I've highlighted, whether official or unofficial. So we'll start out broad markets, look at a few sectors. I want to talk just a little bit about the cannabis stocks, couple commodities, some of the ag commodities, soybeans, coffee, the energy commodities, crude and natural gas, and maybe one or two other things. So should not be a 40-minute video. We should hopefully get this one down to 20 minutes or less. Broad markets, nothing new. I do updates every day. The main things I'm watching for right now, we already had the breakdown in the S&P 500. The divergent high, we've been diverging. Just as I often say and repeatedly say, divergences are not, I repeat, divergences are not a buy or sell signal, merely an indication of a likely trend reversal. Buy and sell, then you need to couple divergences with a buy or sell signal. So as I said, we had breakdowns below the trend lines, but they were not impulsive, not convincing. We didn't break those levels, support levels on the 60-minute charts, such as NQ8200. So there just wasn't enough evidence, and more importantly, we have the sectors above. So there it is, back testing, kind of. Again, the momentum is just really out of this market. It is high, refuses to go down, and overall it's gone up. Sure, a few days kind of stalling out, but again, these momentum indicators speak to that. Such as the PPO, and that's what I'm watching for here. Is the histogram goes down as the PPO line turns down. It means the momentum is slowing during an uptrend, or the momentum is waning during a downtrend. So just as I keep talking about, look for this bearish PPO crossover, and not just on SPY. You want to see it on QQQ. You want to see breaks of price, other things. The more evidence you have, the higher the chance you'll have. And I'm focused on near-term pullback targets, but again, as I did in the video the other day, measure these out. These were all drops ranging from probably 5, 6, 7, 8% or more. Of course, back in this was sloppy. That's when I stay away from the PPO to try to extract or interpret any useful buy and sell signals. When you're in a kind of a sloppy range and the PPO is crossing back above and below, I like these clean, what I call hills, clean separation of the lines, and then the crossovers come, and then you get your corrections, and of course some bigger than others. And again, you can play around with your charts. So that's one thing I'm watching. QQQ as well, getting very close. There it is. The PPO is now at a reading, the histogram at 0.01, meaning any significant downside, another 1% or so drop, we take out those support levels, we'll have that crossover. Is it a be-all end-all sell signal? No, nothing's 100% trading, but you can again replicate this on your own charts. Put the crosshairs up and just see what happened after that point to prices, and then you decide whether or not you want to enter a short trade. And like I keep talking about, at minimum I'm looking for these 3-4% or so pullbacks, but that could certainly, as I showed you here, morph into something more. So there's no one way to trade a stock, swing trade, but one of the things I like to do when I see at minimum the potential for a little move like I'm talking about now, but also the possibility for a much larger move, is to say, instead of covering on that 3-4% pullback, what I'll do, and not risking any get back in profits if that target is hit and we bounce off there, what I might do is say, okay, at that point maybe I'll lower my stops to 2%, give it a 2% stop loss or something. Depends all on the trade, and then let it ride. So that way, if we bounce and it's more than just a little bounce off that support level, I get back a little of my profits, but I still lock in profits on the trade if stopped out. But yet I'm opening the door for what could turn out to be a 10, 15, possibly 20, 30, 40% trade. So that's you'll have to make that decision, and I'll always, as I do, communicate my thoughts, and if anything changes, let you know. So that's that. And then the sectors, I just want to make mention, that was the other thing. Although we had the breakdowns on the indexes, surprisingly, and more importantly, we didn't have it on the biggest sectors. I've covered this in recent videos. XLK, we're right on that trend line. Now, we've been right on it many times. We can ride up this thing for another day, week, even a couple months. Anything is possible. So you want to see these break. XLK, and again, I'm talking about the trend lines off the October 3rd lows. XLV, there it is. I've kind of cleaned this trend line up. I've tightened it up. Just come in, log scaling, Try to hit all these candlesticks there. The skinny part doesn't matter. That's what we call a candlestick shadow up above or below, or down on the bottom. You call the shadow a wick, or a tail, I'm sorry, and on the top a wick. And even if we had one body, for example, go back to XLK, we did have one candlestick body below. I look for, and this is just kind of a tip, I always say trend line drawing is an art, not a science. It is subjective, but I look, where do I have the most number of reactions? And this trend line too, if you exclude that on XLK, it fits. It fits with SPY, it fits with QQQ, it fits with all these other top sectors. So therefore, to me, that candle is insignificant. This is the trend line to watch. XLV, showed you there, XLF financials, that one's broken down today. So here's a a little check mark, but as I talked about, if you're a lawyer and you're trying to try a defendant, you need a preponderance of evidence to convict, without beyond a shadow of a doubt. To find guilty, of course. And in a trend like this, it's been extremely resilient. You don't jump the gun. In other words, I wouldn't short XLF right now just because it broke down, and I most certainly wouldn't say, okay, the stock market is now going to break down because one of the 11 sectors broke down today. It is something to note, and also you look at the validity of that trend line, how many reactions. It's a decent trend line, but again, and we do have the bearish PPO crossover. So if you want to ask me my thoughts, I'll tell you now. I think this could be the start, but like I said, need a little more evidence. So otherwise, if the market continues up, although that is in a vacuum, if I couldn't look at any other charts, I would probably short XLF right here. I have nearly divergence, almost there. I have a bearish PPO crossover that just occurred. I can see it on the lines, but I can put up the histogram, and there it is, so you can see it. I can just tell by looking at the lines they've crossed. So you have everything that I want to see on both the indexes as well as these other sectors, and I'm not going to go through them all again. There's no need to. These top four alone that I just showed, XLK, which is tech, XLV, which is healthcare, XLF, which is financials, and now XLC, communications. Those are the four largest sectors, and they make up collectively over half the returns of the S&P 500. So there's no need to look at basic materials, which only comprises less than a 3% weighting. Same with real estate, 3% weighting, and utilities, 3% weighting. They certainly can trade them off the technicals, but they're not going to move the needle on the S&P 500 like the other ones will. Before I get off the markets, let me just update the other small and mid caps. IWM still in that trading range with that big 159.40-ish level, we'll call it. It broke the trend line, but it's also hovering right at, it's poised, it could break out. I mean, that's a pretty key level. And a breakout, again, you want to see it. It's popped above that level a couple times, but fallen back through. So you want to see confirmation with the indexes. Again, to me, because of what's going on, it's not a breakout that I care to chase, at least not right now at this point in time. And again, don't confuse with me not wanting to go long or doubting or having suspicions about a breakout. The same as shorting it. I'm not going to short a breakout of IWM, of course, that level. I might if it fails, and then the stock market also, the large caps start to give me some sell signals and breakdowns in those sectors. So that's IWM. But I want to talk about some things that are going on right now. There's mid caps, by the way, similar thing, poised to break out. But we have what's called the what I call, at least it's a term I like to call, the dash for trash right now. That is, I'm referring to lower quality, low price stocks, more speculative companies with questionable fundamentals. And then here's one sector we can watch. Now look, I've traded through enough market cycles, although I wasn't an active trader back in the dot-com bubble back in 1999, 2000. I was more of an investor. I was actually a stockbroker at the time. Hadn't really learned the magic or discovered the magic of technical analysis. I was like most people back then, fundamental analysis. And but my point is, with the dot-com bubble and other bubbles I've seen, Bitcoin, recent years, you name them, I've learned enough to know that when you think the market can't go up any higher, or a stock or security, it absolutely can. And that's just the nature of anything. Don't ever underestimate how far something can fall, how oversold a security can get, or on the upside how overbought it can get. So I'm sharing these charts. This can go either way. Here's IWC. So you have, I always talk about Usually the large caps, SPY, the S&P 500, and NASDAQ 100, those are large mega cap stocks. Then you have your mid caps, MDY is the mid cap index, and then you have your small caps, which is IWM or the Russell 2000, which it tracks. And then you have things called microcap stocks that are even smaller. They even smaller microcaps or market caps. IWC is a microcap ETF. So I just wanted to share this chart and share what's going on. So we have, there is a potential. Now I'm obviously still leaning towards the glass half empty kind of bearish thing, thinking any breakout will most likely fail. But I need to point this out. And what I try to do on this site is where my forte lies is identifying support and resistance levels. I'll give you my thoughts as to where I think something's going, but the only guarantee I will ever give you in trading, in investing, as well as this site, is that I will be wrong. You will be wrong. Everyone's going to be wrong at times, so don't ever put too much stock in what anybody says. And again, the takeaway is I'll tell you the levels that are significant, and then you as a trader, if you're bullish, and you're getting tired of, because I know that there's more bearish posts in the trading room. I don't know if it's because my outlook on the market has brings in those kind of people, but again, I will show you the levels if you are bullish, and you can ask me for any chart. If you're a gold member, post that in the trading room. That's part of the advantage of gold membership. I'm still working to catch up. I was out most of yesterday, and I'll get back to you on marking up any chart if I see anything, if I have an opinion. And if I don't, I'm going to tell you my opinion's not that strong. But here's IWC. So where I'm going with this, what that was all about is, if you're looking for trade ideas and this market continues to run up into the end of the year and beyond, in December we have what's called the Santa Claus rally. People look for, a rally up into or around Christmas time, the end of the month. And then in January they have what they call the small cap effect, where small cap stocks tend to outperform. And so if you're looking for trade ideas, this might be one of them. And look, a bull will look for and want to see this, a break above that 93.50-ish level and this downtrend line right here. There's a potential target up there, whereas someone doubting any breakout will stick, like me, might look for a failed breakout or even just a failure here. And again, I wouldn't want to put depends at the time. I might be short the small caps or micro caps and long the large caps at the same time. But what I was getting at is, the market tends to ebb and flow together. Yes, small caps are way off their highs while large caps are at all-time highs. I get that. So this also shows, what's going on here. And it's the same story we saw it back in 2007. Fewer and fewer stocks are carrying the market to new all-time highs because two reasons. First and foremost, they're weighting in the index, in the S&P 500. It's your FANG stocks, Facebook, Amazon, Microsoft, Alphabet, have the largest weighting. Those are market cap weighted indexes. So, and they're also earnings juggernauts. They are consistent, they're tech high growth companies, and so they're pulling it up where you don't have those companies in here. And so I'm just showing you levels should the market break down, and something to watch, especially if we get a continued rally in the markets and you start to see more and more what I call reckless abandon right now into stocks, people chasing the dash for trash. And I said this to a member a couple weeks ago who pointed out we've seen some low biotechs, low stocks rally. I'm all for it. I will, although I don't think the risk reward in the market, broad indexes, is worth it. I'm all, I unfortunately, I care. I took my profits on CLVS, but I rode that one up for, 30-something% after, posting it as a, breakout there. It's up 100% now. Here's an example of dash for trash. This is a small, low-price biotech. I highlighted it right here after it broke out or somewhere here. In this stock, since that breakout is almost doubled. And what I wanted to do was an update because I know some of you might still be in it. Now it hit, right here, it hit 620. I know I took some profits there out. I can't remember where the second lot was. But we just hit that 789 target. I just wanted to point out, although it is a breakout above this downtrend line, and although this stock could continue to run, volume has been strong, and as I said, don't underestimate how far these low price aggressive stocks can go. I will say that's a pretty significant resistance level. Its gap resistance is a big gap right there at 789. Should it power on through there? There was a little momentum fueled overshoot yesterday, but you can see it close right back down below that level. So I always say these trade a daily chart, the daily candles, how it closes are really all that matters. Now, if you get a big intraday breakout and you're right here at 2 p.m. and your breakout level is $5, it's safe to say that breakout's going to stick. But when you pop and then fall back below, and so far you can see, so 789 following a brief intraday Momo overshoot has acted as resistance. Not a bad time if you're in this one to tighten up stops. Maybe it comes in back test. I don't know. All I know is the music is playing right now on a game of musical chairs, meaning the market. You buy just about anything with a ticker on, not just metaphorically speaking, and it's going to go up because people are, again, have a little bit of what I think a reckless abandon, and fundamentals are being cast aside. I mean, there are some stocks with great fundamentals, but I'm talking as a whole, and they're saying, well, why buy Apple? Apple's a strong stock, but Apple, how far back do you have to go in Apple for 100% return? I mean, this stock off the bottom, alone is up 180% in 16 trading sessions. So my point is, I'll hit and run these. A lot of times they'll be unofficial trades because I've traded these long enough, especially biotechs, to know just how much risk is in there. It may not appear on this chart, but I can tell you over the years I've seen not dozens but probably hundreds of biotech stocks gap up or down 50% or more on bad, sudden clinical results, coming out, the FDA stopping clinical trials, or some bad results, or good, goes the other way, a drug approval that wasn't expected to come till later. And so that's that. Let's move away. I just wanted to kind of say this is in that dash or trash area, and say, hey, there's nothing wrong with trading it. Just don't get married to these stocks. Don't put all your eggs in one basket. Know the stock. And so for this one, for example, you would not now or at any point want to have half, 100%, even a third of your portfolio into a stock like this. This is a speculative trade. You take 10 of these. I've highlighted many of these in recent months. If 9 don't pan out, but you're only stopped out, let's say at an average of 5% loss, and one of them does turn out to be that 50, 100% gainer, guess what? You made money. That's why I like diversification, small amounts, especially take it down on the more aggressive stocks so you can allow for wider stops and higher profit targets without exposing your portfolio to an excessive amount of risk. All right, enough on Clovis. On a related note, that was biotechs. Cannabis. We took a shot on cannabis stocks recently. Tilray was only one that panned out, hit the second target, almost a third, and the others, I believe they were all stopped at. Well, it was it wasn't many. It was Tilray, ACB, and did I put up CGC? There might have been one more. I post so many trade ideas and do so many. But here's another one. An update I wanted to do on the stocks here. So in the trading room on Monday, I posted in response. Robert Matthews had mentioned how much pot stocks were down, and this is why I love doing what I do with the site. So many times, someone will point something out that I haven't seen, another member, and oh, great, that's a trade idea, or I'm on something, and then all of a sudden I take my eye off it for a while. Pot stocks was a great example. I hadn't checked them on Monday. Robert Matthews mentioned they were down, and so you can go in. Here's the thread here. If you go in the trading room, so I posted ACB. I said, thank you for pointing that out. It looks like a selling climax. ACB is at support. I'm buying it here off 215. This was a chart I posted. There was my 215 support right there. The stock hit a low that day of 214. And this is a good support level. This stock was very oversold, and I want to do an update on this in case anybody caught that. And I followed up today. The stock hit a low that day on Monday of 214, so it was almost a perfect reversal of that 215 support. That's that lower line there. Positive divergence, and what that was, again, this update today was up 20% at the time. It's now gained over 25% in 2 days. So yes, it's a dash trash, but also there was a fundamental, technical reason. I'm sorry, technical reason for this trade. And just a takeaway now. I know that wasn't posted in the swing trading group because I posted in reply to Robert Matthews or anybody else that was interested. But what I want to point out here is this is what appears to be a selling climax. Could be a near term or it could be a longer term selling climax. So here's a takeaway. If you're new to trading investing, look for, after an extended uptrend, you look for a sharp move up. It consists of several things. You don't just kind of lollygag your way up and then have a selling climax. Usually it comes after a trend and then boom, a very sharp move up like this, and then you look for a volume surge. You see a big spike here. That was a selling climax. That marked a very significant top in ACB. From that point, the stock fell through Monday. It fell about 80%. And so we were, at this point in time, I made it very clear when we went long back here on this breakout, I was only looking for a short-term bear market rally bounce trade and not anything, not trying to call a bottom in the pot stocks. I made that pretty clear in the comments and posts. And again, we fell a little shy of the profit target, and then it broke support. We hit our stop, so hopefully you respect stops. No damage was done. The losses were minimal. I gave 2 stops on that trade, depending if you were only targeting the quick targets or the longer term one. And this is why you don't get married to a trade, and this is why you use stops. You can see it here on the daily chart, right around my stop zone area. You had very nice this support, and that was after we entered the trade. It started going sideways, defining support around 350, and once that broke, the floodgates opened. But this is again a takeaway. Wish I could have gotten that ACB out on the front page, but it would have been a highly speculative trade. Let me make it clear. I don't regret it. I would have never posted that as an official trade. I was attempting to catch a falling knife. So far, I caught it, and right as I started this video, it got stopped out. I did in that update earlier. I said I'm just going to trail stops because I didn't see any solid resistance levels to target. Really, none to up here. And I want to say this: I think it'll probably go up to 350. But what I did, and I was going to update that in this video. We were at 269 when I started the video, and I put a stop at 266, which just hit. If I had to guess, if the market keeps going up and this dash for trash continues, these cannabis stocks obviously are relatively a fledgling industry, will probably go on up and hit that 350 target. We could hit it in a day or two, and that's a big gain from where we're at. But at that point, and I did say, actually, I'm not to jump all over the place here, I did say in that update that I was just going to raise stops and let it run, and that's what I did. But I raised it really tight to take a stock at 2.6, a cannabis stock that's up 14% now and was up higher today, up 25% in the last 2 days, and to run a 3-cent stop or 2 or 3 cent stop on it, you're almost assuring you're going to get stopped out in the daily grind. But my thought process, should it just had continued to run from there, great. And if it got up here, let's say, I might have raised that. If it hit $3, there's a little resistance. I might have then lowered the stop, or raised it, I'm sorry, to 290 in hopes for that. So I just want to kind of share my thoughts, how I trade this potential trading op. Again, I'm doing this because this may be and it appears to be, at the very least, a near-term selling climax, but I can't make a solid case. I have potential but unconfirmed positive divergence on the PPO, no divergence on the RSI because we just made a lower low. So even if it is a beginning, early part of a selling climax, we could do this. We could, move down soon, put in another low that might be a divergent low at lower levels in price. So I'll continue to watch the pot stocks, but again, I've shared my fundamental thoughts back here, and the reason that I thought the pot stocks were way overpriced, way overhyped, and for, again, many reasons. But now technically, I don't care. I don't care about fundamentals because that's what the charts tell you here to buy. And again, a lot of the let's say overbought, overvaluation, overhyped, overloved, everything that was in the stocks back then, a lot of that's been washed out with that 80-something% drop. You got to think of it that way. So there's a valuation play to be made in ACB, and that's a stock I started buying back here on the site. As the first, this has the distinction of being the first penny stock, and it was an over-the-counter stock at the time. ACBFF was the ticker back then. The first one that I felt strong enough to add it on as an official trade, because I made I thought the bullish case was made both technically and fundamentally. And again, we were buying that thing at 55 cents, and it went all the way up to on 12.34. Not that we milked every penny, but we milked a good part of it. Anywho, that's that. And to that, in that post, if you again, if you're in the trading room, in the update I did, this was the link to the original comments that I the thread from Monday, and I said, wow, hadn't even looked at the pot stocks till I read your comment. Just went long ACB. It's deeply oversold at the big 215 support level, and I might look for a few more. It's oversold, bounce off support plays, and blah 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 blah. And oh, there it is. And I mentioned some others here. Cron coming up on support. Cron, Tilway, GWPH, CRB, and actually, oh, so I guess Robert Matthews, he did catch that. Good deal. Okay, now on to MJ. Now this gives you an overview of the sector. MJ does have, and this is a sector ETF. Remember, ACB, although it's one of the big components of MJ, this was the first to market marijuana ETF. There are others in there, and you do have, so you have a lot here that, again, I may re-enter ACB, and I wish I took more of those names. I wish I could tell you I took some of the others. I didn't, and I was out all day, most of the day yesterday. But I may look for an entry, and I might not get it at a lower price. I might have to chase, but I'll sit back for now. But I just wanted to point out, again, this is an update for those that are in the sector interested. That looks like on the ETF a potential selling climax. We have two big green candles so far, following up, impulsive buying, high volume, and if you're looking for targets, you know, you're going to have, there's your reaction low. That's probably the first, you know, resistance level that's likely to come and play as a target, and then that 2028-ish level. And you know, if it is a near-term buying or selling climax, we could easily come all the way back up here to that this level here, 23-ish, plus the intersecting downtrend line. So let me just not mix words. Should, you know, the market hold up? And the good thing about these is these guys have no correlation to the S&P 500. They march to their own drumbeat. They are not, they're almost inverse. There's zero correlation. They're not inversely correlated, and they're not positively correlated to the stock market, because their business model plus their lack of weightings, their lack of inclusion, I should say, in the S&P 500 and NASDAQ 100 right there makes them not correlated there. So that's a potential level to watch. And again, how you want to trade, it's up to you. If you want to try to stay in and swing for the fences, these targets, you're going to need a little tighter stop than I used on ACB today. I just, like I said, felt like tightening stops up at that point, then get that initial bounce that comes off. But I've traded these guys long enough to know I would not be surprised or shocked if it just, you know, continued to do that. You can see it, you know, here and many points in times these guys did that. So there it is. And congrats to anybody that caught those lately. And if you guys want any updates, you know, on individual names in the trading room, if it's anything I covered in this post, that's fair game for silver members. You can post in the comments section any questions on MJ or ACB, because those two were covered in this video. All right, next up, commodities, soybeans added. Soybeans looks fine. It's not taken off yet, but it still looks fine. No reason for me to change the trade parameters. The same reason for entering the trade is still valid right now. It was and still is at support around 1540-ish, 1538, intersecting support levels and back testing the downtrend line here, potential downtrend line. So I still favor something along these lines. Is it one of my favorite trade ideas? No. I don't see a lot in these indicators. I do have the PPO coming down to the zero line, and quite often when it gets above the zero line, the zero line will then act as support during a bullish trend when it falls back to it. And then when you cross down below, you're in a bearish trend, and the zero line tends to act as resistance. So right now we're above the zero line. We crossed above here, and so those are some of the reasons, among others, that you know, I entered this trade, and for now it looks good. And even if it comes down a little, would I add? I wouldn't add to this one if it drops much below the recent lows, whether, you know, I had already taken a position or not. I would rather add on strength and weakness on this particular one. There are some trades, I will tell you, that I will scale down on if that's my plan ahead of time. And I'm going to give you an additional support level right here, I can see. And this is just the chart of the ETN. If you're trading the futures at ZB, let me find that one for you. No, I'm sorry, it's Z soybeans, ZS. Here's what the 60-minute looks like. It looks interesting. 60-minute chart of ZS soybean futures. I see I just added this downtrend line today. So there's a downtrend line. You have the same positive divergence as I mentioned. I think we took it right here the other day with that divergent low. We went up a little. We went back down to where we started, and that has simply extended the divergences. Would be a lot. I'd feel a little better if the PPO could turn back up here. Otherwise, we could continue to, diverge, maybe even run lower. But we're still at, that's a decent support level. And the next support, I'm going to add it here for you. If it breaks that support, it may take our stop out, but there's some support around this level here. Right there where we had that last divergent low that was a catalyst for this rally, and that's all the way down to about 896. So where would the next objective entry be for soybeans, or at least the futures? A breakout above this falling wedge, and then looks something like that. Need to extend this downtrend line out. It's gonna, ooh, didn't mean to move that. Yeah, this chart program here is a little clunky to work with, but there it is. So you can see that would be a near-term target right there. If we broke out, hit that level, I'd expect a reaction. It's pretty decent resistance, and then if we can power through there, they should look good. Otherwise, I can't rule this out yet and move down here. And so again, it's still an active trade. I don't see enough in the charts to pull the plug on it yet, but again, I wouldn't add to it unless it broke out here. And if it breaks down, even if it gets stopped out, I may revisit it as another long entry down here about 896, depending on how the charts look. CL, I'm beating myself up for not getting this one out. I told you I was out. I had to go out yesterday for a few errands. It turned out to be almost an all-day event, and I've had this trend line I was watching, and I got behind. I got back last night. I'm trying to catch up on trading room requests, things, support questions on the site, anything like that, and I just didn't get around to looking at CL. But I had this beautiful trend line here. Tagged it recently, and we're coming off a divergent high, and it exploded off that trend line. So I missed that one, and I just wanted to update because I usually post frequent updates and a lot of trades on CL. And again, it could certainly go higher, but there's quite a bit of resistance right about here, 57.50, and I'm looking at all these reaction highs here. I'm looking at these reaction lows here and back here. So just one that got away, but for future, there's a trend line you can replicate if we pull back to it again, maybe another objective entry. Oh, and it was very oversold when it got there too. That's one other, consideration when you look at the chart. I don't have oversold and overbought lines on this is an RSI 9. Sometimes I'll use an RSI 14 on my daily charts, but on this 60-minute chart, I like to run this RSI 9, and so every security is different, and that's why I'll add lines on. So you can see on crude here, that's pretty much the magic number. About 13 would be your oversold reading. Anything less than that, it's just noise. You get down around there, that's usually where you get your reversals, as you can see here. And that's what we hit the other day. So you guys, I know I hate to do hindsight analysis. I just wanted to point it out. Like I said, it was one to watch. And again, if nothing else, this site is more about is educational. I'm sharing with you what I've learned, things that have both made me money and things that have cost me money, things I've lessons I've learned the hard and expensive way over the years. And so, if nothing better, hopefully you can apply this into your, active trading or investing. The same principles and premises that I use for short-term active swing trading like this, had I bought that there, even day trading, apply just as well and effectively to investing and long-term. This could be a weekly chart. This could be a 10-year span. In this case, I'm on a 60-minute chart, and this low only goes back to that's that magic October 3rd level. I'm focusing on the markets, right? There it is. That's that same trend line, but it's on CL, and boom, we hit it today. And was that today? Yeah, and exploded off at about 5 o'clock this morning, and yeah, something I should have caught. Anyways, let's move on to the next one, and we'll wrap it up. Next one be natural gas. That one I did point out. I pointed out first in the trading room the other day. We were right here. I said either a break recovery back above this level or a move down here. We never recovered. I don't have that chart in front of me, but if you go type in NG in the search tool, and if you have gold level access, you'll see it. So it was over here. We just crossed below there, and I said, if we can recover back above, I think 575, and I showed arrows come down here and buy it at, you had a nice support zone there and support it at 250. But more importantly, I posted on the front page yesterday right there and said, move down here to 250 objective long entry. We ran up, we hit the first target as I did in the update today, pulled back. Remember, a reaction at each level is likely. And if you go into the comments section below this morning's post on it, somebody asked about it. I have usually I like to give pretty, if I have clear targets and levels that I think are high probability targets where reaction's likely, I'll share that. What I did in these recent updates, I have so many little micro resistance levels, and I'm not exactly sure, but I did, when I draw the arrow breaks, it's typically where I expect the reactions, and that's how I believe I drew them. And again, what I'm looking at, if you're wondering, what's in my mind's eye when I draw these levels, I see a reaction there, a reaction here, and a reaction there. So I think that's a pretty well defined. Even we moved through there, somewhat a reaction right there first, and then I see a gap right here. Let's try to box tool it for you. There's a gap right there. I probably should put an arrow break here at that 2640. It's a level we've targeted in the past, and so maybe a reaction off there. But more importantly, if you're saying, well, gosh, so which one did I take profits at? The bigger picture is we put in positive divergence right here on the 60-minute. Pretty big divergent low right here. It goes all the way back here. We've extended this divergence. That sets the stage for a much larger rally. And then, although I don't always include every single time frame in the updates, over the last several months, I've updated. This is a long-term chart of natural gas futures, and even before we broke out of here, I started making the bullish case. We're oversold with positive divergence. We had a divergent low. We broke out, and back then, and in several instances later, I updated what's going on. So when we came back here, I reiterated, a potential bullish scenario. I said it looks like we got the breakout. That was clearly bullish of a big falling wedge. And we were able to capitalize on that a good deal. Back here, I got bullish again, entered, I believe, an official long trade, whether official or unofficial, and said if that's the case, which I think it is, we'll probably get another thrust up, which we did. We got here recently, we put in negative divergence, so I was concerned about a pullback, and that's happened. But again, the bigger picture is, and I said we'd get at least an ABC, and maybe that's all there is to it, but this was a big wedge breakout. We may be in a new larger uptrend. So going back to that's the bigger picture. That's the daily chart. So going back to the chart I was just on, the 60-minute chart of that's NQ. Always look at it. Click on NG. If I can find NG down here at the bottom of my screen, there it is. Again, so if we're in a larger uptrend, then these are where you want to go long for the next trend trade up, the next swing trade up. You want to look for like right here. That was that divergent low after the first correction following the breakout. The breakout of that big daily falling wedge is to the left of the 60-minute chart. My 60-minute chart doesn't go back that far. This is only 2 months. That was the first corrective wave, and where I said, we'd probably get another leg up. That was that next leg up. This was that divergent high there on the daily, and there was a correction that we mostly short on the way down here. We had a couple long trades, so you can see it's wash, rinse, repeat. Now my point is we had a divergent low there, and it led to a rally, but then we had a divergent high, and it led to this correction. But now we have a divergent. Same divergence that started here, but it's larger now. Just like the divergences I'm talking about on the stock market that have been extending. They're still not taken out. They haven't played out for the big drop yet, but they very well could until and unless they're taken out. And in fact, the market's indicating that they will. That's why I'm not moving off my intermediate to longer term bearish outlook for the market yet. We just need the sell signals now. So there it is. So that to get back to how you trade this, it depends. If you bought it here the other day, you can either swing for a double, triple, home run, or the grand slam, meaning just set your stops, raise them maybe at least to entry to at least assure a break even, and try to ride out the minor zigs or zag. Natural gas is a choppy little sucker, but it can really run when it wants to run. We got the inventory report. Was that? I think tomorrow. Yeah, I believe that's tomorrow. Crude was today. And you're going to have to ride through those. And sometimes you get knee-jerk reactions. I made a comment too on that. under this morning's post on the front page earlier this morning, somebody asked about my inventory report. How do you trade around that and all that? So I encourage you, if you're interested in trading natural gas, read those comments. Particularly too, that member asked about, as far as trading U gas and D gas, and there are very, very, very important considerations to make with that. So I highly encourage you. I'm going to wrap this up because if I go another 30 seconds, I lied to you, and it is a 40-minute video. Like I said, it wouldn't be in the beginning. You guys probably know better by now. But there it is. Here's the comments. I think somewhere here. Maybe it was in the trading room where I replied about UGAS and DGAS. So I'll try to find that one later. All right, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.